In this video, I thought it would be fun to take two Seeking Alpha articles, one taking the bull side and the other the bear side, for Palantir stock, break them down and analyze them, see what points are fair and which ones are not so important. And I have not yet read these articles through yet, so this will be my real reaction to each of them, and hopefully I'll be able to provide some valuable insight to every point to cover. So without further ado, let's go. So here is the bear article, the title being Palantir faces an uphill battle of its own making. So let's get started. Growth stocks have been out of favor with investors for months at this point, with various growth names suffering in differing amounts since they lost their shine. Software stocks were a big winner last year, but have been treading water with the broader market for some time, with winners and losers becoming much clearer as the group has ceded its leadership position in the market. One of those names is Palantir, a stock that went public last year for less than half where it trades today. Alright, right off the bat pointing out the stock has doubled in its time as a public company. Palantir had a huge run for about a month after going public, trading about 3 times what it went public for just a couple months earlier. Eventually, Palantir hit $44 briefly. Actually, I think it hit $45 briefly, before selling back down to the low 20s where it sits today. The stock has been a bit range bound since then, but I don't see a lot of reason to be bullish on the chart. So I'd have to agree Palantir is definitely range bound, and that's something we're going to have to focus on if the stock will continue to stay in the mid to low $20 range, or if there will be a break either way. Hopefully we'll get some insight into that for each of these articles as we move through them. So this guy's basically saying he is not very bullish on the chart. Personally, I don't invest based on how the chart looks for a given stock. I'm not very technical with my analysis. I'd rather do fundamental analysis into a given company, and you'll find that with many of my past videos. This channel started out Tesla centric, and now I've been covering a lot of Palantir, so just go ahead and scroll back if you want some of that coverage. The 50-day moving average has been a brick wall since the stock fell below it a couple months ago. So basically here he's saying that Palantir is stuck in the range, and only if it is able to break out of the range box, then there could be a possible uptrend, but until then it will stay stagnant or move lower. At least that's his technical read. The good news is that there appears to be decent support at the $20-21 level. The bad news is that there appears to be a showdown coming between that support level and the declining 50-day moving average. So basically here he's saying that something is going to have to give. So whether that is actually the stock breaking out and moving higher and breaking out of the range, or falling through the support. Let's continue forward. The bottom line on the chart is that there is heavy resistance with the 50-day moving average, and not a lot to be excited about if you're bullish, at least not yet. And I think he's referring to the chart, as he said before. After the 50-day moving average and price support collide, maybe Palantir trades higher and starts a new uptrend. But for me, as you'll see below, I think Palantir is way overvalued, so that appears to be the argument for this article, way overvalued. So I see the odds of a break lower as higher than a bullish break. That is the argument of this article. Now let's go find the supporting evidence. Great business? Check. Well, it appears we will have to wait on that supporting evidence for the downtrend, since he says that now that Palantir is public, we wonder no more about what it is doing, and what it is doing is terrific, especially with the demo days more recently, the double-click series that will continue to happen each quarter. You will continue to hear Jim Cramer called a black box until he actually does his own research, but for everyone else, just watching a demo day presentation is enough to give you a general sense of the company. They're not secretive and closed down. In fact, they're opening up to share about their business model, and their clients. Just go on their website and go exploring. Continuing on, Palantir's customer book soared in 2020, posting 21 deals at least $5 million, and growing its existing customers to the point where its top line gained 47% during a global pandemic. The mega trend of harnessing the power of data has been around for a long time and is only accelerating. So the efficacy of Palantir's business model is not in question. These are some big concessions coming from someone that says they are not interested in the stock, at least from a bullish point of view. Going on to say, if anything, it will only become more relevant over time, and we should see eye-popping revenue growth in the years to come. So what makes Palantir so good? You asked, not me. Every customer wants to use data to their advantage, gaining insights on customer behaviors to drive profit profitable revenue, optimizing the supply chain, optimizing their labor model. There are many companies doing this, but Palantir somehow always seems to be in front of the rest. That is a very interesting concession coming from a bear on the stock. Palantir is a cut above the competition. This person isn't even choosing to put any competition in the discussion. They are saying Palantir is so unique, it's the only one in its field that can do what it does. Of course, this is something that I and many others have been saying for a long time, but still interesting to read in an article like this. The company's Gotham and Foundry platforms allow customers of any size or type to use various sources of data to create customized data analysis solutions to help them solve their unique business problems. Palantir has a long history of working with businesses but also government agencies to solve complex issues. That means Palantir's revenue is sticky and it continues to demonstrate its abilities over time. And as it continues to demonstrate its abilities over time, the applications of its technology should only grow. Again, some great bullish points. Palantir's customer retention rate is very high. Once you're into Palantir's ecosystem, or flywheel as I like to put it, you will be coming back. In addition, it provides customers with a virtually instantaneous, completely transparent upgrade cycle, and that is of course with Apollo. Now I'm not going to read through his write-up of the details here, that's not what this video is for, but that is definitely a key benefit to choosing Palantir as a potential client. Overall, this focus on the customer value proposition is part of the reason why Palantir has been so successful. Now moving on to growth. Palantir's business is terrific and its products really are outstanding. It isn't just hype, and as we'll see now, the company has big plans. And let me just stop and say, I should have said this at the beginning, I'm not endorsing this writer, and I don't even necessarily endorse Seeking Alpha as a platform, but I do think it is important to listen to those who are willing to share their opinions in the community, especially when it comes to a widely misunderstood, in my opinion, stock like Palantir. So what does this person have to say about growth? Well, Palantir has been trying to diversify away from government clients, but the segment still makes up well over half of the total revenue. Government clients tend to offer stickier revenue growth to vendors, given contracts are typically longer, and as Palantir has proven its worth, it has seen usage soar. Indeed, government customers produced 77% higher revenue last year, which is staggering. Palantir has positioned itself as the leader in helping the Department of Defense and others, and that position is paying off. It will be very difficult for anyone to beat Palantir in this space. So again, conceding some very strong bull points. But here comes the other side of the argument. Palantir's revenue is extremely concentrated. Revenue from the company's top 20 customers soared 34% last year, and while it fell in terms of concentration, it was 61% of the total. That is a tremendous amount of customer concentration risk for Palantir, and while it is working to get that number lower, I can't think of another business of meaningful size that has that kind of concentration risk. So it's an interesting point for sure, but definitely not one that would stop me from buying into the company. Since Palantir is at such an early stage, it's well far below its target number of customers, and we know it has huge growth plans. So as it continues to scale, the customer concentration risk will actually drop correspondingly. So personally, I think that statistic is more of just a nitpick, not a real argument. I'll keep you updated on this after the Q1 earnings report. The good news though is that margins are outstanding, as you'd expect for a software business. Another bullish point, I'm beginning to wonder where the bearish argument comes from. Not only are margins outstanding, they're getting better. Gross margin is now in excess of 80% of revenues, and that number should only rise as more and more customers are signed, since software has very little in the way of variable costs. Delivering more of it costs Palantir very little, meaning incremental revenue is increasingly profitable. That's why gross margin is soaring and why it should continue to rise. Keep in mind that at 81% for the year, there isn't a huge amount of upside left, but I'd expect Palantir's margin to continue to rise in the years to come. There is a big complaint about profitability. He hasn't brought that up yet, but he is talking here about the gross margins, and even said, delivering more software costs Palantir very little. Incremental revenue is increasingly profitable, and this is a core thesis of mine for the company. Palantir is going to be immensely profitable in the future. It's just a matter of growth and scale, and investing in the future, not optimizing for small quarterly profits very early on in your growth cycle as a company. But I have a feeling we're going to hear more about that in just a second. The valuation. Hopefully I've made it clear that I really do think Palantir's business is exceptional, marking itself apart from a very crowded, cloud-based data analysis sector. However, for all that goodness, I simply cannot make the valuation work for the bulls. Okay, well, here it is. He has made a very compelling argument, albeit brief and rather short in general, but a good case for the company. It's growing, it's a strong, sticky business, it has great clients. So why wouldn't he want to buy the stock? Well, here it comes. He thinks the price is just way exorbitantly high, and I'll give it to him. It really sounds like he wants to love this company. Let's see how terrible the valuation can be in his terms to stop him from buying it. And he's definitely not alone on this. The stock is about half of what it was at its peak a few months ago, and still it trades at 30 times this year's revenue. Of course, that number declines pretty quickly into next year and 2023, but we're still talking about 23x and 18x respectively. That kind of multiple is difficult to swallow given that the valuations in the sector have come down and are in nowhere near the stratosphere of Palantir's price to sales multiple. I'm not a big fan in multiples in general. Personally, I like to look at the total addressable market and market cap as a good general guide for how big a company could get long term into the future. I do respect the fact that these numbers are important for many investors, and Palantir, given its current financial situation, perhaps does not work with the price to sales multiple, but I'll get to more closing thoughts on that once he's done with his argument. But let's hear what else he has to say. One important point that I don't want to lose sight of is the fact that we have to use price to sales at all. Palantir doesn't produce meaningful earnings despite its massive revenue base that is growing quickly. Okay, that's a fair point. Totally fair. This should get better over time as it produces operating leverage with incremental revenue. But bulls shouldn't lose sight of the fact that this company has $1.5 billion in revenue, 80% plus gross margins, and still can't turn more than a token profit. So there it is. He brings up how owning Palantir would be easier to justify if it actually was profitable. And he is saying how he understands that the incremental revenue from each government contract should drive immense profitability in the future. So I'm in line with his expectations there. And then he brings out the figures that Palantir posts, and they still can't turn a profit. So basically that's the critique. Is Palantir structurally unprofitable? Again, I'll hit you with some closing thoughts once we hear the wrap up to this argument, since he says, unfortunately for the bulls, the pain does not end there. Alright, let's continue. And then he shows us this consensus revenue revision trend. Personally, I don't think this is at all worth spending the time to look at, but you can definitely if you want to. Basically, he's saying that revisions for Palantir have been weak, and they are definitely not moving in the right direction, at least to a high degree. And another fair point that is, when seeing this chart and the stock is valued based upon its revenue base, this is a big problem. So sure, if Palantir is unable to leverage enormous gains in revenue, in client growth, and in general expansion of all of its platforms, then the company is in trouble. But I remain bullish on Palantir going from large-scale enterprises down to medium-sized corporations and even small-scale businesses for Foundry. I think Gotham is going to continue to expand in the US government throughout this decade in ways that we have not seen before. I think it's going to be in every single department. I just think that is the bullish hope for that platform in particular. And then we have to wonder about if Palantir launches any future platforms, if Palantir Unlock starts to do anything, if Palantir Apollo generates revenue. It's just there are a lot of wild cards that you have to start to think about before you consider these consensus estimates to be fact. All I'm saying is that if the consensus isn't great, that doesn't necessarily mean that the actual future is fully baked into that consensus. And he says, finally, the last nail in the coffin for me is Palantir's love of stock-based compensation. I'm not going to go into the specifics, but let's see his overall opinion. He says, unless something radically changes with the way it pays its employees, Palantir is subject not only to its current liability of at least 304 million options, but also any additional dilution that will take place to pay employees. So I know I skipped through the specifics there, but that's because I want to read you what Palantir just released with their most recent SEC filing. Let's hop on over to compensation philosophy, page 28, if you wish to follow along. Our executive compensation philosophy is shaped by a strong belief that a competitiveness of pay opportunities alongside a long-term performance-based pay orientation drives our success and returns for our stockholders. The objective of our executive compensation program is to attract, retain, and incentivize the most talented personnel who embody our mission and values, increase the competitiveness of our overall compensation program relative to to other companies we compete with for such personnel and incentivize them to work diligently to further our growth and profitability. We do this by designing programs that link executive compensation to overall performance and interests of our stockholders. Okay, so this is their overall philosophy, and this doesn't appear to be the specific verbiage for just any stock-based compensation, but rather for that higher-end stock-based compensation, such as that for Aleksandrs, which everyone always complains about. Anyway, let's hear their final thoughts here. As our business evolves, we intend to continually evaluate our compensation programs, and we intend to review executive compensation annually in light of our performance, macroeconomic, and sector-specific developments, and market trends that may impact executive compensation. We will undertake future evaluations with the support of and input from outside executive compensation consultants and other relevant experts. That does appear to be a response to executive compensation. Nevertheless, it is important. Not everything is set in stone. It's a much more flexible payout. They do say how they think it incentivizes shareholder returns by aligning employee and shareholder values. So again, I've been through the stock-based compensation argument so many times. It is a fair criticism, but getting back to the article, to finish it off, he says, the bottom line is that Palantir is a great company, but one that is priced far too high. The company's lack of meaningful profits is also going to be exacerbated by the fact that it distributes absolutely enormous numbers of options to employees as compensation. So as dilution takes place, there will be willing sellers after the options are exercised, as well as the fact that a lot more shares will be outstanding. As Palantir tries to grow earnings per share, having more and more shares outstanding to spread its very thin earnings over is counterproductive, to say the least. In short, Palantir is hurting its own chances at boosting EPS over time through massive dilution. Given all this, I'm not necessarily bearish on Palantir, but I see no reason to buy. If it breaks below support at $20 to $21 and nosedives into the mid-teens or less, I'll take another look. I don't see it going to the mid-teens, but I'm a shareholder. Call me biased. But for now, the stock is in a sort of no man's land between support and resistance. And from a fundamental perspective, this stock is not only very expensive, but faces an uphill battle thanks to the company's compensation practices. I'll pass on this one. Time to give you some closing thoughts now that I've read through all of this and break down some final arguments. He did cram a lot in at the end here. Again, conceding that Palantir is a great company, but the main two arguments it appears, stock-based compensation and corresponding dilution, as he mentions there with the shares outstanding, given that the company is not profitable, so that has a double negative effect and can hurt the company if they don't figure out profitability, but also have this massive dilution, basically just saying no reason to buy. Overall, it's good to have this kind of argument because it means there is another side to the story. It isn't just a bunch of people from Wall Street bets buying the stock. You want to have bears out there because they're the ones who will buy in once the financials are all straightened out and the company operates much smoother and better in the future, because they'll be the ones buying Apple at $2 trillion, Amazon at $1.5 trillion, and Tesla into the trillions. Of course I will be too, but I digress. I get it. The stock is a little too turbulent for some investors, and that's just fine, but that means there is opportunity out there. I'm not advising you to do anything. I'm definitely not advising you to buy. There is tremendous risk involved in owning any stock, but the core thesis here is one that could very well be debunked as soon as this very next earnings report. He's saying the financials are not strong enough to hold up this stock. The valuation is too high for the current business. But if they get stock-based compensation under control, the earnings improve, and the multiple starts to look a little better, I think there will be less to complain about and the valuation will start to make more sense. Or, as I believe, you'll see the stock rise accordingly. I don't think you should be picking up pennies in front of a steamroller with Palantir. You can say you want the valuation to be something better, but ultimately you might not get a chance to buy at that valuation. You and I do not set the prices. So I'll just close by saying that I think there is enough interest in Palantir that is going to keep the stock high enough above a valuation that many would find attractive. There are some fair points for sure in this article, but I think the stock-based compensation one is one that is far too often brought up. For me, at least I believe, it is not a deal breaker, and I think the financials will improve very soon, and the valuation is just something you have to deal with. Or, as he said, pass on the stock. It's ultimately how much would you be willing to pay for this company if you know in a few years it is going to be worth much more. So to each their own, I guess. And I was planning to analyze a bullish article. If you want to see that next, hit like and leave a comment. I'll catch you in the next video. Until next time.